You're listening to Therapy for Your Money, a podcast about all things money and finance for therapy practice owners. If you want to feel confident and in control of your financial life, then you've come to the right spot. I'm your host, Julie Harris. I'm an accountant and the owner of Green Oak Accounting. My firm specializes in working with private practices across the U.S., and my team and I have worked with hundreds of private practice owners. I'm on a mission to share all the best practices I've learned along the way because I want you to have a profitable private practice. All right, hello everyone. Today we're talking all about nonprofits, starting a nonprofit, and whether you should do it or not. In my accounting firm, we work so much with the mental health industry, and because it's such a helping profession, we often get asked about what it looks like for therapists to start a nonprofit and what are the considerations, the logistics around it. So today my guest is Tosha Anderson. She is the owner of the Charity CFO, and they are an accounting firm that specializes in working with nonprofits. Tosha, welcome to the podcast.
Thank you so much for having me. I'm excited to start talking about this today.
Yeah, so tell us a little bit about yourself and your business.
So a little bit about, me, I specialize in nonprofits. That ranges. In fact, I work with a lot of mental health service providing agencies, a lot of social service agencies, and it kind of runs the gamut of all the different clients that we work with. But we started the firm in response similar to you. There's an industry that has very specific needs, and we just focus primarily on that. So we started the firm about 4.5 years ago, and that's all we do. We help nonprofits get compliant, stay compliant, and focus on what they're really there for. And that's, the mission and helping people.
And I will call you the nonprofit queen. I'm anointing you with that title. So I asked you to be on the podcast because a lot of practice owners have this pull, right, to do more and help more. And so for a lot of folks, that means they consider starting a nonprofit. I've also seen a lot of clinicians start their practices as nonprofits as well. It's less common, but that does happen. So my first question to you is, when does it even make sense to start a nonprofit?
Yeah, I think a lot of people go that route by default, thinking that a nonprofit is a good way to reach more people or to help people that may not have the means to pay for private practice. If you don't accept insurance, right? But the reality is the only time that I can imagine it makes sense to start your practice as a nonprofit would be if you are looking for funding from very specific sources that only offer support to nonprofits. And that's actually a pretty small population. For example, family foundations or maybe some governmental entities, but by and large, most nonprofits would bill the same funding sources that a for-profit business would bill in the same way. So unless there is a very specific funder that you've identified, you could be better served. You can serve more people by becoming a nonprofit, therefore charging that particular funder for the services. It doesn't seem to make any sense to become a nonprofit. And we can go into some of the compliance logistics a little bit later, I know, but really just to kind of recap, they're basically the same. The only reason you would choose a nonprofit is if there was a funding source that you've identified that you can only get money from if you are a nonprofit. And like I said, generally that list is actually pretty small. So do some research, identify who you want to get money from, who's paying for these services. Is it going to be the clients? Is it going to be Medicare, Medicaid? Is it going to be health insurance? If that's the case, then you can actually operate as a nonprofit or a for-profit. It makes no difference.
Yeah, and so in a typical for-profit, that would be an LLC, an S Corp, most of the legal entities that we see every day for small businesses. Medicare, Medicaid, very easy to bill within a for-profit entity. And it's easier for the owner to get paid as well, right? There's a little more flexibility there on getting either a salary, an owner's draw, an owner's distribution. Those things are not available in a nonprofit, correct?
Yeah, you certainly, there's a whole structure for which you have to be accountable for your pay. So when it comes to pay, that's kind of a touchy subject for some of us. So just to kind of break it down on what that means if you wanted to get paid in a nonprofit, generally in your bylaws, so the governing document that says how you're going to run your nonprofit, your board has to decide what your pay is going to be. So when you create your business, you have to create a board or a group of people that are now your boss, and your bosses collectively decide what your compensation is going to be. So that, if as a founder or the practitioner, the owner, in simplistic terms, of this organization that is being created, this practice, you are now not able to give yourself raises. It must be voted on. It must be documented in board minutes, and it needs to be collectively agreed upon by this new group of bosses that you've identified, right? So then there's that issue. So if you generate any additional surpluses, you then have to go to the board to get any sort of bonuses. And bonuses are a little taboo and a little
Frowned upon, maybe.
frowned upon. That word, we like to call them, advances or, additional compensation or one-time payouts. Because bonuses are frowned upon in the nonprofit space, because a lot of times people think about, if you're a nonprofit, then you get money from donations, and should people's donations be given in the way of bonuses? So that's a little bit of an issue. So if you had a really successful year, the odds of you having your compensation tied to that success is going to be much more difficult than if you were a for-profit business. And what a lot of people don't realize, that nonprofits must disclose a lot of their financial information, up to and including your top executives' pay. So your pay will now be public knowledge to anyone that wants to see it. And that shows up on your annual tax returns, again, that then get posted to the IRS website and shared, to the public. So not only do you have to get the green light from the board to get paid, but you also will then be providing that information to the public, that people can then comment, scrutinize, or question the pay that you receive.
Yeah, that would certainly give me pause, right? It makes you think a for-profit is probably a simpler way to operate a practice in most cases. So I want to come back to the conversation that most often my clients have with us when the nonprofit topic is coming up, is they'll say something along the lines of, there's this specific population, whatever it may be, that I really want to help. I want to do more. And maybe they are a private pay practice where they're offering a sliding scale, but they also want maybe some, what they're calling like scholarship spots, or they want someone, or, a donor to be able to cover the cost of a specific length of treatment for a population that they find in need. And that's very altruistic, but it also is very complicated. So they think then maybe we should just also have a nonprofit so that we can receive donations and then serve this population.
Mm-hmm.
But there's a lot of other ways around that, right? Instead of just starting a nonprofit.
Right. I mean, because you have to kind of weigh, how much are you saving by getting additional funding to scholarship these, individuals, versus what are you paying in additional compliance and complexity to maintain now two different entities. So what I would recommend to people that are looking to scholarship, consider a way that if you want to do pro bono services, you can certainly do that, have sliding scales, which is often really common in the mental health space, or find funders that would be willing to pay for it, and your tax status is not a determinant to whether you can help these people or not. And like I said, there's a lot of funders out there that don't care if you're a for-profit or a nonprofit. They just want to serve the community, and they have a pot of money to do so. So as long as you can connect with them, I think it's keeping it as simple as possible is ideal, almost in any case, honestly.
And so in a for-profit entity, if a funder was donating or wanting to support that specific population, then that would just be income to the business versus having that nonprofit status, but it's still deductible in many cases to a business if they were the ones donating. So tell us about the compliance piece, because that I think is the biggest deterrent and is the biggest place where people go wrong.
Yeah. So on a very simplistic way, to kind of start from the compliance side, there's generally some things that, any business owner or founder of a nonprofit need to understand. Generally, almost in every state, there's some sort of registration on an annual or biannual basis, right? So you have to register with your state, or you have to at least understand what your state requires. And usually, like I said, that comes in the way of some sort of annual registration. On a local level, you might have some sort of business license, so you can check with your local bodies about that. On the federal level, though, so kind of keep in mind that you get incorporated at the state level. So the state says, yes, you are in fact a business. You just so happen to call yourself a nonprofit. The IRS is actually who decides if you are considered a tax exempt entity, right? So that process goes through the IRS at the federal level. The IRS requires a tax return to be filed every year, regardless if you've received any money, if you've considered yourself inactive, if you've considered yourself insignificant. And I think this is an area where people get really confused because as a taxpayer, say I'm a W-2 employee, I've always been a W-2 employee, and you have some withholdings, and you might be able to get that money back, but it's so insignificant. It's like, I claimed 0 exemptions. I'm not going to go through the process of filing a tax return. You can actually generally kind of get away with that as a W-2 employee, assuming, that you're not going to owe any money to the IRS. You just fail to file a tax return. The nonprofit status, that is not the case. You must file a tax return because the tax return is not a calculation of who owes who. Does the taxpayer owe the IRS or does the IRS owe the taxpayer? It is an informational return that tells the public what you are doing, and it is not optional. So every year, regardless of your level of activity, you must submit some sort of tax return. And there's a couple different versions of it, and it depends on how large of an organization you are. But you have to submit something to the IRS every single year. And if you fail to submit something to the IRS for 3 consecutive years in a row, they will automatically revoke your tax exempt status. So you have to go through that whole application process all over again, which for anybody that's gone through that process knows that the application can be upwards of 40, 50. I've seen applications up to 200 pages long. It can cost thousands and thousands of dollars for your attorneys to help you navigate. You have to go through that all over again. So there's certainly the annual compliance, which is certainly, something that you want to keep your informed on. And then there's also things like, maintaining a board. You have to make sure that you have people that are staying involved, even though you are kind of running the show. As the founder, that's not uncommon for you to do all the work, but you have to have a board. And then you also, if you get funding from anyone, the funders dictate their compliance that they require. And every funder, of course, is different. So they might have specific outcomes you have to track. They might have specific training that you have to complete. They might have specific reporting that you have to have. They all vary. And so I tell my clients, more money, more problems. The more money you get, we have to keep a running tally of all the things we owe to people. And I kind of have a funny story. I used to be a CFO of a nonprofit. It was about $11 million a year. And we compiled all the outcomes. So this was a mental health agency for children in foster care. We had 14 different government contracts, and we had 4 pages front and back of different outcomes that we had to track.
Wow.
Right? Not the same. So you think, well, I'm just offering mental health services for children. True. But what their specific priorities are, or what their specific boards have determined is useful information for them to then relay to their constituents, the taxpayers, frankly. That's how they want to share their story of impact. That means you then have to track all of those things, and you have to report on it at different intervals. So yeah, it's a lot of compliance.
And I'm going to jump in and say, if you have a nonprofit, you really, really do need some professional help with keeping the books in order and filing the tax returns, right? Because I know you've seen some crazy stories, right?
Yes. Oh, lots. Generally on a weekly basis, I'll get, especially right now, there are some significant tax deadlines. Usually it's April 15th, November 15th, a couple different significant tax deadlines. And Julie's right. I mean, there are so many different ways that a nonprofit can easily get out of line and into some pretty messy waters, which frankly is how I ended up in this practice. And it's not just on the tax side. I didn't go into all the details too of all the different compliance, but payroll is another big issue that if you're not working with a professional that understands what they're doing with payroll taxes, this goes for a for-profit or a nonprofit really, but things can get out of hand really, really quickly. And you can get fines and penalties that are so substantial that your business could fail to continue. And one of the things people think about from the nonprofit side, that it might protect them from any sort of liabilities. But the truth is, I had a client who fell behind on payroll taxes. It's a nonprofit. They put a lien against the executive director's house, personal residence, and the assistant executive director. And their argument was if they sign checks and choose which vendors to pay, then they by default chose not to pay the vendor that's called the IRS. And if they possess that much authority to make those decisions, then they should be held personally responsible. So just because you're a nonprofit does not mean that you couldn't be held legally or financially responsible for those decisions. And the board as well, board members could have that responsibility as well if they were involved in that level of decision making.
Wow. So how do you find board members, or how does that get determined when a nonprofit is started?
Yeah, so I'll tell you the practical answer, and then I'll tell you the common answer.
Got it.
So the practical answer is you would bring in board members that would help you grow your cause, meaning could they make introductions for you? Could they solicit large donations? Could they introduce you to potential funders? For example, maybe you want to get a contract with a specific government agency and you need that introduction just to explain why you're different or unique and they should support you. Or they bring a level of expertise that you're going to need. So for example, attorneys are highly sought after board members. Everybody wants an attorney, especially because board members generally do the work pro bono. So everyone wants a free attorney. Generally people want some sort of accountant, because they bring that level of expertise and generally free. And other people that might be in the space of insurance, or maybe there are other mental health professionals that have more of a programmatic or practice expertise. So generally people should look at a board composition in terms of talent matrix. What are the different talents we need to run this business? And who are those individuals best suited? And then of course, many funders want to see some diversity in that space. So whether it's male, female, racial, it could be age, could be geographic location, if you're serving populations from all over the place. So for example, in the city that I'm in, do you have board members just in very exclusive zip codes, or do you actually have board members that are coming from a variety of, zip codes within the same city that you're serving, right? So that can actually speak of a representative population. Now that's the good practice. The common practice for founders of small nonprofits, they recruit friends and family members.
Okay. So that's what happens most often. And how does that work out?
Generally it's kind of a stopgap measure, I would say, for most organizations. If they're truly trying to grow this into a sizable organization, they're going to eventually have to evolve and get some of the talent matrix that I was describing before. I think some of the challenges, frankly, that I see, if you have a founder and they've surrounded themselves with friends and family, you're not going to have a lot of pushback from your board because they trust that you know what you're doing. And sometimes I've seen that's to the detriment of the mission, that a founder is not kept accountable or does not have people. I mean, you see that all the time, right?
Right.
Politicians or celebrities or who, they surround themselves with people that just reinforce whatever their decisions are and not really ask some of the difficult questions that really the organization could benefit from.
I see. Okay. And so, I've also heard you talk often about audits, right? And that consideration when accepting a donation. So can you talk through that a little bit?
Yeah, that brings up a really good point because audits are unique by state. So generally there's a couple different audits that I think people think about. They think about initially the IRS audit, because probably up until this point, anyone listening to this call has been an employee or a small business owner. And when you think of an audit, you think about the IRS giving you a call or sending you a letter showing up to your door and wanting to inspect your work, right? Or, your receipts and what have you. IRS audits almost generally never happen. I've actually never seen an IRS audit of a nonprofit, frankly, because it goes down to the state level. So the state levels basically decide at a certain tipping point in revenue, then the state would require a nonprofit to hire what they call an independent auditor. This is a CPA firm that they must pay for. So the IRS isn't going to come in and pay for an audit of your books. I don't know if it's worse. You have to pay for the audit, an independent auditor to come in, look at everything and express an opinion on not just are your books in order? Are you doing everything as you should? What they call like internal controls. Do you have checks and balances in place to make sure you're not taking advantage of this organization? And so there's certain tipping points. Every state is different. For example, I'm in Missouri. There are no requirements for a nonprofit to get an audit. In Illinois, so I'm actually in St. Louis, so I'm right on the border. If I drive 10 minutes east, I'm in Illinois. If I open up an organization in Illinois, the state of Illinois requires any nonprofit over 300,000 to have an audit. So check out your state requirements and decide, especially if you're in a remote place, what is the most advantageous state to operate in. But if you choose the state that you are a resident in, make sure you're informed on what the audit requirements are.
Because that audit can get very, very pricey, right?
Again, I mean, even the smallest audits, the smallest organizations, I'm talking, let's say 250,000. Once you start crossing that threshold where the lowest thresholds for some states could still cost about 8,000 a year. And that the odds of getting through an audit with no professional help on a monthly basis, meaning if you don't have some sort of professional bookkeeper or accounting service to keep your books to get through an audit. So it's not just the cost of the audit, it's all of the ongoing preventative maintenance.
Preventative maintenance.
An audit. That's what I call the work that we do. We work with clients to make sure they can get through an audit. So of course there's the audits for, in the true sense, but then also you could have audits from the government for which you get funding from. So licensing audits, right? Medicaid, Medicare could come in. Any funder really that gives you money reserves the right to come in and audit. When I was a CFO, we had 14 different government contracts, and I used to joke my office was a revolving door. It felt like every week I was having somebody come in and audit me. And you just have to make sure that everything is in good order, which going back to the preventative maintenance of hiring a professional once you hit a certain point.
All right. So at what point would it make sense for a for-profit business to either start a nonprofit separately, or does it ever make sense for a private practice operated by one, quote unquote owner to be a nonprofit? When does that ever make sense?
There are times where I've seen nonprofits create for-profits. And I've seen cases where for-profits will have a nonprofit arm. And usually it's in the way of if you want to create some sort of foundation and you want to gift money to individuals, or you want to solicit donations from the public, generally is when it makes sense to create a nonprofit. You want to create some sort of mechanism, because although I as a for-profit business could gift usually money for the work that you do, but there aren't those tax saving benefits there. And could that trigger additional taxes on the receiver's end? Because if it's considered a gift, or is it income, or however you want to decide. So a lot of savvy donors are going to want to get that tax write-off. So once you start soliciting donations from the public, you certainly want to do that. Or like I said, if there's certain very high dollars contracts from the government that you can only get when you're a nonprofit, then that might make sense. I will say, though, that some nonprofits choose to open up for-profits because of partnerships or collaborations with other nonprofits. They could own real estate, that land banking, and a number of other scenarios that would trigger them to have what they call unrelated business income, which basically means the IRS has deemed you to do this mission. And once you start pivoting off into something else because it makes sense, I will say too, founders might have a passion for the mission, but they might have intellectual property. So for example, if you're a mental health professional, but you've published and you want to keep your intellectual property royalties from that separate from your nonprofit. So that's something that I advise. I've had a couple founders create apps or, other sort of electronic technology. I had one client that I talked to that had created hair products But so they kept their mission a nonprofit, but they kept their intellectual property separate from that.
Okay. And that was a case where there then is a new for-profit entity next to the nonprofit. Okay.
Yeah. And it's really difficult to transition from a nonprofit to a for-profit because you can't accumulate things that the public has given you over the years and then decide, well, I'm going to make this a for-profit business for which I happen to be the 100% owner and the beneficiary for all of that. It's very difficult to do. There's very specific rules that you basically then have to gift that money back out to the public. You can't just keep it.
Okay. So how would you wind down so if someone has a nonprofit that, has been doing very minimal work or maybe has lost their status, how would you wind that down?
Yeah. Well, first I would definitely reach out to an attorney because on a state by state basis, figure out what you need to dissolve it. But generally you have to file a final tax return with the IRS, probably file something with your state, but I would definitely refer to an attorney on that, especially if there's any sort of commingling or partnership, or if you're going to transfer the name or any other, copyrights or trademarks or anything like that. I would definitely talk to an attorney about that. But generally it's as simple as filing a final tax return and, filing some paperwork with the state.
Okay.
If there are no remaining assets.
Got it. So if there's basically a bank account with very little money. Okay.
Yeah.
So if someone has listened to our conversation and still thinks, I really still want to do this, what would be kind of the first few steps to get them started on getting the nonprofit off the ground?
Yeah. So I love this book. I'm looking for it right now. It's kind of funny. Just a simple book on Amazon. I think it's called From Passion to Execution. I don't know the author. I just happen to like the book. It's by Lynn Scott. It's called From Passion to Execution, How to Start and Grow an Effective Nonprofit Organization. And it'll talk you through all the different, practical housekeeping steps in order to get incorporated with the state, which is actually fairly easy to do, how to open up a bank account, how to get an EIN number, how to register with the IRS. And it actually is a really comprehensive guide and walks you through all the main steps. It gives you some good templates to get started as well, which you'll need in order to file some of those forms with those appropriate individuals. So on a more practical level, figuring out what those steps are, and that book's pretty good. You can get it on Amazon. Again, it's Lynn Scott, From Passion to Execution. So that's on a practical level. And then I think kind of on a more advanced level, start looking at different funding sources or how you might actually support the organization. If there's any benefits to that and figuring out, there might very well be, and in some cases there are great benefits to making it a nonprofit. But look at your state's requirements on an annual compliance and see what that looks like and understand what you're signing up for. So if you have to get an audit after a certain period of time, you kind of understand what those things mean.
And you can be prepared. Okay.
And think about who you're going to have on your board that may not necessarily be friends and family.
Got it. And just from personal experience, having seen many folks go through this process, I would say you cannot run a nonprofit from your personal bank account. So get a bank account for the nonprofit and get a QuickBooks account, right? Keep everything separate. You and the nonprofit are not one. You must keep it completely separate.
Yes, absolutely. And you must always keep the receipts. I get that question a lot. Do I have to keep all receipts? I am in the spirit of reputation management. And technically the IRS has a small threshold. I think it's like $25 where they consider it de minimis. The problem is if most of your expenses are considered de minimis, which means you have no record keeping, that's not good for you. I keep copies of all receipts for nonprofits because you don't want anybody to question your integrity and therefore impact your reputation, because this is a public charity oftentimes. If you don't want anybody being accusatory about what you did with the funds and not have the paperwork to substantiate any of those charges. So keep all receipts.
And what I'm hearing from you is there's a lot more scrutiny in a nonprofit than in any other business, because anyone can really come see what's going on, right?
Yeah, absolutely. Your board can question, your donors can question, the government, certainly, anyone from the public. In fact, usually you identify on your tax return how you make your tax return available to the public upon request. And some people put those on, and it shows, where you spent your money, how much your compensation was. So it's certainly in your best interest, especially I would assume most of these people on here have licenses, they have solid reputations, they want to maintain that. So I always recommend to people get talent before you think you need it, and try to be as proactive as possible. And I call that reputation management. It's an insurance policy for making sure that no one can accuse you of anything that is, unethical or inappropriate.
I love your phrase, reputation management. Like you want to just have all the cards above the table so everyone knows what's going on. There's nothing untowards.
Yeah.
All right, Tosha, this question I ask of all of my guests, what is your favorite business book and why?
I have a lot. I think if I had to really pare it down, that has been the most transformative for me is probably the E-Myth.
Okay.
I, like many people, find it difficult that when people pay for your time and expertise, how do you develop a business that is not completely dependent on you, which is kind of an oxymoron. The business is you, right? So how do you find all of the different ways to make your business less dependent on you so that you can focus on the areas that you actually love? And so I spend most of my days obsessing on how to delegate the things I don't have to do and focus all of my energy on the things that I actually really enjoy.
I love to hear that. And I heard of the E-Myth for the first time from a client years ago. And I love that book. Mm-hmm. But I also want to put out, I think mentioned to me Atomic Habits, which I just finished reading on Audible. And I've loved it. I love that book. And that was a referral from you. So thank you for that.
Yeah, you bet. I try to read a lot of them. You pick up little bits and pieces along the way and you kind of form your own, but those are some pretty significant books there.
Great. Well, so if any of our listeners have a nonprofit and they need help with it, where can they find out more about you and the Charity CFO?
The easiest way is just to go to our website, thecharitycfo.com, and you can sign up for our newsletter or request a meeting to chat with me personally through that website. And I think that's probably the easiest way, or follow us on social media.
Perfect. And we'll link to Tosha and the Charity CFO in the show notes as well. Tosha, thanks so much for coming on. I really, really enjoyed chatting with you.
Yeah, it was good.
All right, listeners, if you've got the feeling in your heart that you're ready for a nonprofit and that's the next step for you, I hope that today's episode gave you a realistic view of what exactly that compliance is going to be. I've seen many therapists with a nonprofit over the years, and about 90% of them have either lost their status or had it revoked because of the lack of compliance and just not knowing what to do. So that was our goal today, to get you some really good basic information on where you would start and what you really need to look out for. If you want to find out more about Tosha and the Charity CFO, head over to therapyforyourmoney.com. We'll have a worksheet with some of the tips that we discussed today, and we'll also link directly to Tosha and the Charity CFO. Talk soon. If you're looking for accounting help, head over to therapyforyourmoney.com/accounting to find information about my accounting firm and all of our specialized services just for private practice owners. If you enjoyed today's episode, we'd love for you to give us a 5-star rating on iTunes. Just head over to iTunes, click on ratings and reviews, and give us a quick shout out. We really appreciate it.
The information contained in this podcast represents the host and guest's general opinions and should not be construed as personalized accounting and tax advice. Listeners should consider all facts and circumstances before applying this information and seek appropriate advice from an accountant, financial planner, lawyer, or other professional. Any info provided does not constitute accounting, tax, or legal advice.